Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we're going to talk about an awesome leading indicator for the markets. You're not going to want to miss this. It has to do with semiconductors. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey Bob, pretty interesting charts we're going to share with people, but I think at first you want to share with them one of our tools that we use.
Yeah, Phil, I want to show you Super Micro. So to me, this one and NVIDIA just are the egregious examples of the excess that's happening here with this AI bubble. And it pushed up pretty hard into June. And we talked about these combo signals last week with trading option with SPY. Well, we did the same thing with Super Micro, and you had a Kona cell and a sniper cell, and it pushed down, depending on how far you stayed in the trade, 10 to 15% down move on this. If you traded options, you probably had a couple shots at some 50% to a double, depending on how you attacked it. And we're setting up again here, Phil. This chart is as of Tuesday, and it pushed up again high into 280 and came back down. Sniper already sold and hit it, and this is sometimes it does this like little bit of a follow-on move here that we call it the scare the children move above a double top. And now we're waiting for either the heat signal or the Kona signal to fire, and I'm looking again for another 10 to 15% move down into the following month here on Super Micro. So there's a trader toolkit if you guys are interested in it at tradelikeagenius.com. We talked about this last couple of weeks. It's available, and people are listening have been buying it, and I think you guys will really, really love it. So I want to at least lead in with that because it ties into some of these articles that you found, Phil, that I think should scare the hell out of people who have been in this AI bubble.
Yeah, and I like SMCI as a short or a sell because for the most part, it's just been tagging along these names. It's not really a pure AI. It's not really a pure chip play because it's a retailer. And so I just think it's way overvalued in that regard as well. But yeah, if we segue over to the article here. So Taiwan's exports plunged at the fastest pace in 14 years.
Yeah, I don't think people quite grasp the fact is NVIDIA, they get their chips from Taiwan Semiconductor in Taiwan.
Right.
And so you can't say the only thing buying is AI chips. We know that's not true.
Right.
And with the a lot of these cloud computing companies is they have a lot of excess capacity. And so you tie that with I just read today that employers are really clamping down on people using ChatGPT. I think, we're past that initial euphoria now. And I think a lot of people are taking a step back and trying to understand, really what's the true value here, because it costs a lot of money. You just can't plug in an AI chip from Super Micro, and next thing you know, you're operating like a robotic organization. It's going to take millions and millions of dollars of consulting and programming to program these chips.
Right.
And to program the software to be able to replace the people that they want to replace or to run their business more efficiently in other ways. And so you got China, which had a false dawn, and the United States is slowing down now too, Phil. And then we have China gonna basically cut off exports of gallium and germanium, and we've already cut off access to the chips, us in the Netherlands, the chips to China actually to build things. So I think we're setting up for basically a nuclear winter here for the chips. But you have another chart for us to show us too.
Right. Yeah. So this is the fastest pace of decline since August of 2009. Remember, that was back when the S&P 500 was trading in triple digits. So that was really coming off a really bad time. But if we look now at this other chart, which is the basically what it is the export growth monthly on a line chart here, and you can see that, we're at very bearish levels, and typically the stock, if you were to, we don't have it overlaid, but if you were to overlay the S&P 500 on this downturn, these prints down here in the negative 20 territory is a great, awesome leading indicator. There's usually like this Jaws look where S&P's up and this is coming down, and then the S&P 500 catches down to it. So I don't know. I think every other day we're showing you data prints from various different things, consumer, retailers, now microchips, all in recession territory, Bob.
Yeah, I mean, look, I feel like we have an alligator farm. I mean, every stock price is not following any of this data. I can only really, probably derive two really answers for it. One is they think the Fed's going to relent, right? And just dump their interest rates and the market's going to go sky high, or we just have massive manipulation right now to keep the stock market from crashing, and the leverage is unseen. I think it's a little bit of both. I think they don't believe Powell, and the leverage, we see it in the zero DTE. It's like every day, almost every day, a new record of call contracts coming in, and at some point, man, the tide goes out. And so it's kind of nervous, and we're long. I think, you went long again. I know you've been in and out of Bitcoin quite a bit. The Bitcoin miners have been ripping, and now energy's ripping. So I'm like, no, I'm long and nervous, Phil, and definitely out of tech. So I think tech's going to.
Yeah, look, I have two thoughts on this. One is you're starting to feel like the market's a little detached from reality, and you had that sentiment during COVID. The big difference was that the amount of money that was being printed, right? The Fed was basically just pouring tons of liquidity into the system. So that's why that market did what it did, even though the fundamentals, if it was left on its own, we'd be back at triple digits as S&P 500 during that time. The problem here, though, with the same feeling of a detached market is that the Fed is not accommodating here. So we're strictly being floated just on derivatives, right? The options market is the market now, and how those guys are hedging gives this market a tailwind or it gives it a headwind. But what's going on now is we're getting contracting, the ranges are contracting. So something's going to give. And when you don't have the real underlying buying support in this market, and it's all derivative based, eventually you get a pretty swift correction. So I think that's what's at risk here. My other thought was that your point about cutting rates. Though every time they cut rate, and that's what I don't get, and everyone's got a short-term memory. Whenever you're cutting rates from a yield curve inversion, and mind you, this inversion is some of the deepest ones we've ever seen, right? Going back to the Great Depression, the 2s and the 10s. When you cut after a 2-10 yield curve inversion, as deep as this one is, it's always extremely bearish for the markets. We're talking like, water falling lower over the next few months. And so I think this market is very complacent, given that I do think I think we've seen the last of the hikes. Maybe we get one more, but I think that's going to be it. And the next time they talk, it's going to be probably cutting, and it's probably going to be short notice, right? We're not going to have a lot of lead time, and we will get that cut. But that's going to be in reacting. And the reason why it's very bearish is because typically from a yield curve inversion, your first cut is reacting to a risk-off environment, recession environment, where the data is really poor, jobs numbers are starting to falter. And I think that's what we're in store for. So I think the downside risk from, let's say we're trading up here north of 4,400, I think we've got much more downside risk than upside risk. So your risk reward here is actually to be going and getting hedged or stepping aside from this market right now.
Yeah, I agree. The Fed's always late. So when they start cutting, bad news is coming.
Right. And that bad news is bad news for the market. So
that's right. That's for sure. Yeah. So Phil, it's really interesting. And this is the last of the bubbles. So once this one goes, nothing really holding up the cues. And remember the 24th, they have that rebalancing too. I don't think we have any idea what that's going to do to the markets. It could be a big nothing burger, but it could really amplify some negative trades too. So it's something to keep in mind.
Yeah, I've been reading where the market probably should be reacting to that, because the indices are not going to be behaving quite the same. So the thought was that there should be a pullback. If there's not, then there's probably more complacency there. But fundamentally, there will be a material difference in how these markets behave after that, at least on the NASDAQ side of things.
Yeah, and I think that's something that's affecting right now. So, but anyway, that's what I got, Phil. I think it's going to be really interesting. CPI tomorrow, guys. PPI Thursday. There's some news coming up here for the balance of the week.
Yep, should be volatile. So we'll check in with you guys tomorrow. And thanks for watching, guys. Please hit like and subscribe. Check out our offerings at tradegenius.co, and we'll see you guys tomorrow. Thanks for watching.
Trade Genius.